Maximus Analysis here, and I wanted to do a video in regards to the S&P 500. And this is the E-mini contracts for that, just using the continuous contract. What I wanted to show you is that from the 2009 low, we have completed a 5-wave pattern. So if you guys have been following any type of Elliott wave, you know that there's 5 basically moves within. There's 1, 2, 3 is the longest, 4, and then 5 up top. Now, the kind of the basic rules behind it is that the first move comes up, then the second. The third is the longest one. The fourth needs to be bigger in regards to price and time. So just to kind of show you what I mean here, this has to be, let's say we measure this out here. Okay, this gives the time extension from the top and also the price. We want to make sure that this is longer. So you see that's almost double or triple this fourth wave, and also it goes deeper into it, only a little bit, but it does go deeper in regards to price as well. So this is a 5-wave completion pattern. If you look at the bottom, I've included a very basic stochastic 1433, and that usually can give you pretty decent oversold and overbought levels, and pretty much put some some price levels in, and also give this uptrend line. What I'm expecting now is, again, I would not go long. Here's the target that I have, plus a big resistance point. So the 2 resistance points that I had coming up here was, if you guys been watching the videos, you can go back. The 2186 level was where I thought they were going to stop out here. Again, they held this 2045 level on this. This is the election. And they have run up a significant amount. Again, the 2272 level was where I said that they're going to pause it out. Again, what I'm expecting is even if it breaks up to 2300, that's fine. It could be a little blip depending on if there's any volatility with tomorrow's inauguration. But now is not the time to get into the trade. Again, I always tell people to please trade at the extremes. And right now, where do you put your stop? A lot of people do not feel comfortable putting their stop almost 100 points away. And if you're not comfortable doing that, that means that you wait for the trade. Now, in trading, probably the biggest thing that is going to kill most accounts are overtrading and lack of patience. Okay, it's those days that you get chopped like today that you have to take a trade versus seeing a trade appear. It's almost like you can say, the fear of missing out, because you might have missed the Trump move up, and again, they're labeling it Trump. I don't like talking about politics, but the election move up, if you missed that or were scared to do that, and again, I did have put out before the election a newsletter that basically said I was bullish going into this event and use about a quarter of your position sizing to manage your risk. Now, with that being said, we are at this position now. So again, going back, this is the weekly chart. We see we have our 5-wave completion. And again, I am trying not to be what I consider an Elliott wave analyst, meaning that some people have to have waves with everything. And it ends up that they miss things because they're trying their best to fit this little model when the markets are actually just a bunch of emotions priced out on the chart. Now, with that being said, I am looking for an ABC correction that could look something similar to this. You'd have your A move down. Again, I think that they will come down below that 88 level, and they will pop back up. Okay, popping back up, and then finally going down and seeing where they go. I don't know if they test right here. That still would be an ABC correction, or they go down further. Again, any break of this top of 2131 would be a significant sign that, okay, I'm going to take a break, because again, they could just come back and then continue to go lower. But I just wanted to put this out there that, again, even with these small patterns, the upside, you have to have targets as well as stops. And if you want to get in now because you've missed, you have to wait. Now I will put this on a daily time frame. I usually use the weekly time frame, but you can see how choppy this price action has been into these levels. And again, I'm looking for an ABC correction. You still have the higher lows in place, banging against this 2272 level. But again, like I said, you have your 5-wave completion on a weekly time frame going all the way back to the last inauguration or that thereof. Again, the last inauguration was January 2009, and you had your low coming in at March. So they've made a significant move all the way up, and I think that we are at the top of this move. Now, does that mean that it completely breaks and goes into a bear market? I'm not sure. All I know is that if we get a break of this 200-day moving average, which corresponds with the $2,000 mark or significant level for that, that is where I would say, okay, we could have something, and especially if we broke below these lows, that would be something that, again, the 1800 level. But I don't want to go that far. I just want to let you know that, again, it's timing, okay? You can be bullish, but that doesn't mean you put on a bullish trade. And that's something that you please understand. The dynamics and power of that is to say, I am bullish, but I don't see a bullish trade as yet. Wait for your trade. Wait for the market to provide versus you. Another thing that a lot of people will do is start going down in time frames. I've done it. This is coming from experience, not from a place of scolding you. If I didn't find a trade on the daily, sometimes I would go down on hourly because I wanted to trade. That is not the thing. You pick your trigger time frame and you go with it. It's a sign of maturity. It's a sign of what is, basically saying that this is not a game. This is a business, and I have to get my setup to properly fit into this peg for me to pull the trigger or push the button. Okay, this is your hard-earned money. Don't use the fear of missing out and ego to get you in a trade without a proper stop put in place. So again, I wanted to show you, again, this is from 2009. We have our 5-wave completion pattern done. And again, I'm looking to see if they'll break below this timing angle, and then where we go from there. So again, if you have any comments or questions, you can feel free to email me at max@maximusanalysis.com. Take care. We'll see again. I don't think there'll be too much fireworks tomorrow. Who knows? But again, I don't expect there to be much more upside potential with this right now. Again, break into the 2300. Okay, same thing happened when I said that 2186. I went up to 2195 or something like that. Cool. I'm not trying to be perfect. I'm just trying to give some insight on where we live in space in the trend. Take care.